May profits be upon you. I have a quick video that I want to put out for MAGS. What is MAGS? MAGS is the Magnificent Seven stocks. All right. It's an ETF. Roundhill Magnificent Seven ETF. You can look it up and get some facts on it. Um, that ETF includes Tesla. Who else? Nvidia, Alphabet, Amazon, Apple, Meta, Nvidia, and Microsoft. I think I did I mention somebody twice? Yeah, I think I got it right. So, yeah, uh, it's a pretty nice bundle, and obviously, if you look at this chart, you can see that it since its inception, there's been a lot of growth and profit. Yeah, it took a dip starting in July, right? It took a dip for a few months. Then it started to find its footing again. All right. But what I want to bring to your notice is that we have traded through this swing high. This is an intermediate swing high versus a major swing high. All right. This intermediate swing high is the higher high, higher low, higher high situation. All right. Looks like we may have an uptrend going here. All right. We have to recognize that price traded through that high and closed above it, opened and closed above it. All right. This is bullish price action here. And it indicates that price does want to go higher. All right. And when you see that displacement where there is a fair value gap left behind, all right, out of a area of fair value, otherwise known as an order block, uh, it's a very it's a very valid way of seeing price action and order flow just by checking the fair value gap. You know it's bullish, all right, and you know that price will likely use that fair value gap to test or mitigate and in order to go higher. All right. So the fact that uh, the swing high is intersecting that bullish fair value gap, this acts as a confluence of support, so that when price does come back to this POI, we can have confidence that this fair value gap, this bullish fair value gap, will hold. Hence, my little green arrow there. All right, so we have more than made contact. Now, I want you to remember this is about internal to external, external to internal, the pursuit of liquidity, which is what moves the markets. All right, this high was made. Price created this fractal here. All right, that fractal high pulled down into a bullish fair value gap, found its it found support here, found its footing, and pushed higher. This area is the internal. This area is the external. That high. Once it pushes past a high, it's um, completed the internal to external move. Now, what comes next? The external, the new high to an internal target. The internal targets are always fair value gaps and uh, order blocks. All right. But for me, a bullish order block is not valid, or a bearish order block is not valid if there's no displacement. If I don't see displacement, it's not strong, and I don't have confidence that this order block will hold price should price revisit it, to mitigate. All right. For mitigation, I just don't have confidence in it. But this one I do have confidence in. One, because there's some confluences here, the the high intersecting the bullish fair value gap, as well as the strong close here and the open and close above that high. This is a trade through. You're looking for a price to pull back and then continue higher from this fair value gap. Now, if we go down one time frame, from the weekly time frame to the daily, you will see that price has the weekly fair value gap here, right? Same one that's here, but inside is a daily fair value gap. Yes, there's a lot of volume imbalances inside here, right? But I've marked out the daily fair value gap, which is nested within the weekly fair value gap with that swing high here, intersecting right through the middle. I have pretty high confidence in this area for buying. All right. And I'm looking for price to give those signatures that we'll see on the lower time frames. If we go down to the hourly, you wait for price, you look for an area like a fair value gap or a swing low for a price to contact, and then you're looking for your buy setup to your entry function on the lower time frame, which is would be the 5, from the daily to the 1 hour to the 5. All right, 5 is where I enter my enter market, and I'm looking for price to tap to finally make it up to this high here. Right now, the immediate target, the immediate buy side liquidity is at this high here, right around 48, the $48 mark. All right, and up higher at the $50 mark is where I'm hoping that price finally reaches, as it makes higher high, higher low, higher high, higher low. I'm looking for that higher high to end up here eventually. This is the longer term target, but the immediate target, this is the one I'm looking for right here. And if we can reach that by from the Friday news, the NFP, all right, non-farm payroll. Once we see that news, I would love to see price hit that mark. Anyway, I wanted to share that with you, and I'm telling you what I'm looking for. You tell me what you think. I would love to see and hear your comments on this video, and if you like the video, give a thumbs up or give a boost. And just know that that's what I appreciate. Uh, I that kind of feedback, especially if you leave a comment. I really love that, and I will shout you out if you do. All right. Trade carefully. May profits be upon you. Hey, this is one I should mention. This one I'm gonna buy and hold, and I would also offer dollar cost averaging. All right, when price gets right around here, right below the midpoint here, if it makes it down this far, this is where I would probably add in another. I would add in one here, and when price gets down around this area, if it does get that far, I would add another in. I would dollar cost average this in, because this is a long term situation here for me, and I don't know what it might be for you, but hey, you make your own decisions. Okay, I will see you in the next video. Thank you for watching.